Toshiba was once and still is a household name in Japan. It has a vast lineage of excellence, which has lasted a century and a half. Back in its heyday, it invented flash memory, supplied and offered services for plenty of electronic components, semiconductors, elevators, escalators, printers, batteries, lighting, and was involved in infrastructure projects. Toshiba at one point was one of the biggest manufacturers of computers, medical equipment, and consumer electronics in Japan. It was a symbol of Japanese technological pride. Today, the giant conglomerate is a shadow of its former self. Currently, a large part of its value is from the stocks it owns in a memory chip company called Kioxia. The rest of Toshiba's businesses, while massive, are in steady decline. Toshiba's downfall began in the 2008 financial crisis, where America's housing market bubble wreaked havoc on economies across the globe. Since Toshiba had businesses in many parts of Japan's economy, a bad economy meant that its businesses were either in decline or losing money. It all started in 2008. After the 2008 financial crisis, Toshiba's finances were suffering because of the weak economy, so Toshiba management attempted to fix that through brute force. Toshiba had a toxic corporate culture, and its management forced Toshiba employees to achieve unrealistic sales targets. Toshiba's former CEOs often pressured employees before the end of the quarter or fiscal year, the time when quarterly earnings and annual reports would be reported. As a result, Toshiba's division heads, fearing management, cooked the books. They artificially inflated Toshiba's profits, postponed losses, and tried pushing forward sales on their balance sheets, and even made fake reports about Toshiba's financial growth so their higher-ups would be happy. After an investigation by a top prosecutor in Japan, Toshiba revealed it had overstated pre-tax profits by more than $2 billion over the past 7 years. The Japanese government slapped a $60 million fine on Toshiba for their antics, one of the largest fines in Japan's history. The de facto CEO at the time was forced to resign, and an ex-Toshiba CEO resigned from a panel which advised the Japanese Prime Minister about economic policy. $8 billion had been wiped out from Toshiba stock. Half of its 16 board members had to resign. Then 2 years after the first crisis, another one erupted. In America, Toshiba had spent too much money building nuclear reactors for Westinghouse, its American nuclear power company. Billions of dollars were spent, and it had nothing to show for it. The nuclear reactors were half finished, and what's worse was Toshiba had hidden its subsidiaries' financial troubles for 18 months, worsening the situation. So Westinghouse Electric went bankrupt. Toshiba lost a ton of money because of this incident. There were fears that Toshiba would go under because of this. In fact, Toshiba was forced to raise money by selling its extremely lucrative memory chip business to Bain Capital for $18 billion and sought help from foreign investors. The company didn't want to be delisted from Tokyo Stock Exchange if it could help it. In 2017, while Toshiba was on the verge of total collapse, Toshiba forcibly raised money from a ton of foreign companies, over 30 investment firms and hedge funds from overseas. In exchange for some $5 billion, Toshiba gave up over 25%, an entire quarter of the company, to Gaijin shareholders. Elliott Management, an activist fund, got 10% of Toshiba shares. Now these investment firms like Elliott Management were vulture funds. They do not care about the longevity of Toshiba as a company. They only wanted to pressure Toshiba's board to make them more money, to recoup their investments and then some. These vulture funds want short-term profit as fast as possible so they can move on to the next company to harass for money. Currently, activist funds own 30% of Toshiba stock in addition to other foreign shareholders and overseas investors who own 60% of Toshiba stock. The double whammy of the 2015 accounting scandal, followed almost immediately by the bankruptcy of Toshiba's nuclear reactor subsidiary company, meant that Toshiba was bleeding money. At some point, foreign investors lost patience with Toshiba and ordered it to shut down the company and liquidate the entire company, sell everything the company had, and pay investors their money back as a dividend. This was a nightmarish scenario for Toshiba execs, so they asked for the Japanese government's help. The foreign activist investors tried to appoint 3 directors to Toshiba's board to fix the company's problems, improve corporate governance, and potentially sell off all of Toshiba's assets. Toshiba clearly doesn't like this, which is why they actually went and used their connections with the Japanese ministry to fight off the vulture fund's demands. Toshiba owned a lot of strategic assets, so the Japanese government allegedly took on Toshiba CEO's request for help and forcibly intervened by using illegal, underhanded tactics. One Toshiba executive revealed what was going on behind the scenes when he told reporters that they would ask Japan's trade ministry, the METI, to beat up the hedge funds trying to boss them around. There was damning evidence found in one of Toshiba's employee emails saying they would ask the METI, the Japanese Ministry of Economy, to beat up the foreigners for a while. It is alleged that Toshiba senior management reached out to Japan's Ministry of Economy, Trade and Industry METI for help against the activist investors a few days before its confrontation with their gaijin investors at Toshiba's annual general meeting. METI, the Japanese ministry, is feigning ignorance to accusations that it carried out illegal activities to aid Toshiba, saying it would review the allegations at a later date. So what did the Japanese ministry do that was illegal? The Japanese ministry actually tried to force Affissimo Capital Management to withdraw some of its nominations, candidates who could be chosen to join Toshiba's board of directors. As a result, none of the candidates from the Singapore-based company Affissimo Capital were elected at Toshiba's annual general meeting. The METI had also tried intimidation tactics to scare off another Singapore-based investment firm, 3D Investment Partners, warning that the company should not be barbecuing next to their neighbors when there is a big fire, suggesting that 3D Partners should not join Affissimo in a shareholder vote to bring in new directors to management. The Harvard Endowment Fund, one of Toshiba's many shareholders, had been told by an advisor at METI that Japan would conduct a regulatory probe on Harvard's endowment fund operations in Japan if they went against the choices made by Toshiba's top brass. This basically meant that the Harvard Endowment Fund could not vote to appoint new activist investor picks to the board if they didn't want the Japanese government to investigate their Japanese operations. The Harvard Fund actually decided not to vote during the Toshiba general meeting. Interfering with the shareholder vote of a company is obviously illegal and against the law, especially when the guilty party is actually part of the government who is supposed to be enforcing the rules in the first place. A few top executives and directors resigned from Toshiba in response to the shocking revelations shown in the report. As a result, activist investors have failed to appoint new candidates to Toshiba's board. Japan does not like foreigners owning key parts of their nation's strategic assets. Semiconductor companies like kioxia and companies involved in nuclear power are far too important for Japan's protectionist tendencies to ignore. The authorities are keeping a close eye at Toshiba's situation. According to the June 2021 report commissioned by angry foreign investors of Toshiba, Japan's own chief cabinet secretary at the time, Mr. Yoshihide Suga, had allegedly encouraged senior executives at Toshiba to put on pressure on foreign investors. Mr. Suga, who is currently the Prime Minister of Japan, has repeatedly denied allegations that he encouraged Toshiba to fight its foreign investors during a breakfast meeting with a high-ranking Toshiba executive. The Prime Minister of Japan stated he had never said, "If we are aggressive, we can get them," with Japan's foreign ownership rules which were designed to protect companies critical to Japan's national security. Toshiba does not want foreigners on its board, but those hopes were dashed completely. When people found out that Toshiba and Japan had colluded to fight off foreign investors, there was an uproar. 4 days after the June 2021 report, foreign shareholders used their collective powers to kick out Toshiba's board chairman and Toshiba's entire audit committee. The overseas investors had gotten their revenge, and this was just the beginning. Toshiba, in spite of all their controversy, is still trying to recover. The company had plans to split into 3 companies. The first company would focus on infrastructure like its turbines and water treatment business. The second company would be in charge of Toshiba's electronic device businesses, and the third company would handle Toshiba's kioxia memory chip stock. Unfortunately, Toshiba's foreign shareholders did not like the 3-way split and threatened to block the plan in Toshiba's shareholder vote. Toshiba relented and tried splitting the company into 2 parts instead, but foreign investors were still not pleased. Foreign investors had been trying to get Toshiba to do a more extensive restructuring to get their return on investment, but it wasn't happening like how they had expected initially. It's been 5 years since Toshiba began its descent to madness by accepting money from foreign activist investors. Both Toshiba and its overseas foreign activist investors widely distrust and hate each other. Activist investors argued that Toshiba should put itself up for sale and look for a potential buyer. This way, activist investors would have a way to get their return on investments. Ordinarily, the 2 sides would have fought tooth and nail to stop each other's proposals again. However, Toshiba was tired. Japanese companies, especially Zaibatsu, as big as Toshiba, generally own each other's shares, so the company had never had to deal with its own investors before. Toshiba had zero experience contending with foreign activist investors. Unlike in every other country, including America, where companies are beholden to their shareholders and are forced to answer to their shareholders if profits are waning, Japan's shareholders actually lack any real power. So investors angrily demanding companies to make changes to make more money quicker in Japan is very, very rare. Most Japanese zaibatsu or large companies in Japan operate under the legacy keiretsu system. In the keiretsu system, Japanese companies protect each other by buying out each other's shares and giving each other supply and business contracts. In this way, Japanese companies are incentivized to hold their shares of their fellow Japanese companies because, well, there is no point selling them. The bulk of a giant Japanese conglomerate shares are majority held by other giant Japanese conglomerates. Retail investors only get to buy a tiny slice of the pie of the underlying stock, so investors in the Japanese stock market don't expect to make large returns on their investments similar to the ones seen in America. Stock prices of Japanese conglomerates stay stagnant and unchanged for sometimes decades. In exchange, this keiretsu arrangement shields giant Japanese conglomerates like Toshiba from pressures of outside investors, and Toshiba management was always protected from the rabid shareholders through the keiretsu system. All of that changed when Toshiba opened up the floodgates and sold its shares to foreign investors. Now Toshiba had no protection from shareholder demands, and what's worse is the type of shareholder Toshiba acquired happened to be activist investors, the vultures of the investment world, who are laser focused on getting profits at the expense of the company's long-term prospects. Toshiba's management could not handle this new breed of investor activism. The pressure was too much, so Toshiba finally caved in 100% and agreed to the demands of foreign shareholders. Toshiba put itself up for auction. It also brought in two activist investors from Elliott Management and Farallon Capital Japan LLC, two of its biggest shareholders, onto its board to mend its relationship with activist investors, since both sides want the same thing now. They both want a Toshiba buyout to go through. Management has announced that they will sell their unimportant business segments of the company to increase its shareholder dividend payout to foreign investors to $2.5 billion. Toshiba has so far received 8 buyout offers and is currently reviewing them. Japan doesn't like the privatization of Toshiba because of national security ties, while Toshiba's new CEO doesn't want Toshiba to be split up after the buyout to unlock more shareholder value. Activist investors already have a seat on the table and they're out for blood money. No one can defy activist investors who own more than half the company. Toshiba's glory days are over. The fact that people who are going to cash out and lose interest in the company are the same people who are making decisions for the future of the company is proof the only roadblock that remains is the Japanese government, who are not keen on giving away a company tied to national strategic interests. Toshiba is an important company to Japan because it owns nuclear reactors and makes defensive equipment. Japan's government wants to be certain their strategic interests won't be compromised by the Toshiba arrangement. To reach an agreement, Toshiba has to satisfy two parties, its activist shareholders and the Japanese government. Japan's government wants to be certain their national interests won't be compromised by the Toshiba buyout. This could lead to a long drawn-out battle between activist investors and the Japanese government. But one thing is for certain, Toshiba's days as a Japanese conglomerate and a symbol of Japanese excellence is over. Like and subscribe.